All right, good evening, everybody. Um, I'm excited to be here again tonight. We still have a lot to share. We're going to continue from where we stopped yesterday. So if you can see my face and hear my voice, I like to just type one in the comment section. If you can see my face, you can hear my voice. Just type one in the comment section. It's beautiful to be here tonight. I'm excited to be here tonight. I like to just type one in the comment section. You can see me, you can hear my voice. Just type one in the comment section. Just type one in the comment section if you can hear me, if you can see my voice. You can see my face and hear my voice. Just type one in the comment section. All right, beautiful. And so let's quickly continue. I don't want to take much time. I just want to go straight to our training tonight. Now, first of all, I was saying something yesterday that the fact that majority of people that are here, almost 100% of everybody in this group that are learning from here are either other people who know nothing about forex trading before, or those who are just beginners at the very beginning of learning how to trade financial markets, and that makes it beautiful. And so I'm going to be following my syllabus systematically. So I needed to pay attention. I need to pay attention. We're moving from the elementary part of trading to the advanced level. I trust that we'll be able to go very far within the next 12 to 15 days. The last training I did lasted about 6 weeks or more, but what we did in 6 weeks, I just want to do it in 12 days. So I like you to pay attention. I like you to be attentive. I like you to maybe anytime from tomorrow's class, it will be coming very interactive. You, in the course of the training, you'll be having assignment. Make sure you do assignment. It's just a gift to you. I'm just trying to help you and take you by the hand and lead you by the way. Give you this skill, even if you will not trade. At least learn it. See how things work. Okay, see how the market maker operate. See how financial market work. Okay, just learn it. There's nothing wrong if you acquire this skill. If some of you are undergraduate, 100 level, 200 level, if I have this chance, I attempted it in 200 level, and you see, the first time I would attempt to learn to trade forex was many years back. I remember one of the executive brothers in my school fellowship, I paid him to teach me to trade, and then I didn't get a jack from it because those were the days I didn't really have internet. Was not like it is today. You do, But then you have this opportunity, and what you should have paid for with huge amount of money, I'm going to share it with you for free, and I'm not going to be taking anything back from you within the next 12 to 15 days. So I like you to pay attention. So I want to quickly go straight to my slide, and then we continue from there. Let me share my slide with you. So this was where we got to yesterday. What is forex trading? What is forex trading? Um, this is where this actually we're getting to the beginning now. We're getting to, you know, where the work really is. What is forex trading? The word forex is from the word foreign exchange. When you hear forex, the FOR from the word forex is from the word foreign, and EX is from the word exchange. So it actually means foreign exchange. And what that means is that as long as there is exchange uh, in between countries, like I was saying yesterday, as long as the exchange is taking place between countries and it's occurring in different currencies, there will always be forex. There will always be forex. Many Ponzi's have come up and disguised as if they were really trading forex, and then they scam people of their hard-earned money and they ran away with it. But you see, anybody who has been familiar with trading real market, we know from the beginning, when he sees how those people operate, we know that they are scams. CBS came, sapped away people's money. Another guys that came, ICPC, they carted away people's money. And then a lot have been coming and been going, and they tell you to press something and buy something. So if you actually know, if you have learned to trade forex before that time, you will not be a victim. Many people who were victim of that, you will not be victims. I think you see that those ones they come and go. The one that lasted the most is one that lasts maybe 4 to 5 months. 4 to 5 months. That's the longest any of them has ever lasted. The maybe at worst or at most 6 months. It's not even possible to last for 6 months, any of those Ponzi. But you see, forex, foreign exchange or forex, it has come to stay. It has been here for years. It will always be here. Why don't you just spend time learning how to trade forex instead of putting your money in those Ponzi and using your money in those scams that tell you to press a button, you earn amount of money, and then imagine everybody is earning the same thing. And imagine the kind of system that does not lose money at all. You're always winning and winning and winning, and then you have exact amount of money you're expecting in the morning. When you wake up in the morning, when you press the button, no, it doesn't work like that. Forex doesn't work like that. To those who knew how to trade forex, they will never fall victim of CBEX. They will never fall victim of all these many other Ponzi that have come and have gone. Some are still out there. Okay, and so forex is the act of buying one currency and selling another one at the same time in order to make profit from the changes in the exchange rates. Okay, it is the act of buying one currency and selling another currency at the same time. It's like, the reason why forex is different from every other trade that we do is because you exchange currency for currency. In the other kind of businesses or transactions, you exchange currency for goods or you exchange currency for services. You exchange foreign currency for goods, you exchange currency for services. But when it comes to trading financial market, you're exchanging currency for currency. That is what makes the difference. So forex trading, it's just like you go to meet an aboki man maybe in the market somewhere, and then you say, I want to buy dollar, I want to buy dollar, I want to buy dollar. Oh, then he gives you these rates. So what that means is that, okay, you're going to be giving him a currency, possibly naira if you're in Nigeria, or Ghana cedis if you are in Ghana, or South Africa rand if you are in South Africa. Then you collect dollar from him. Then you give them your own local currency to collect another currency, maybe foreign currency, and by that you are exchanging currency for currency. Now, when you do that for the purpose of making gain, for the purpose of making profit, you are already trading forex. Whether you do it offline or you're doing it online. But for the purpose of this class, our focus is going to be doing it online, trading forex, trading currency against currency, buying one currency and selling another currency at the same time for the purpose of making profits. And we're going to be doing it electronically. That is what makes this one different from the one that people do offline. So forex trading is the business of speculating on currency price movement in the global currency market. When you speculate, when you say, okay, based on the statistics, based on the data, based on the information, based on the economic data, this and this what's going to happen to this country and to that country. And then by that understanding and speculation, I'm going to be buying this, I'm going to be selling this currency. So that's how it happens. So, for example, if you believe that pounds will rise against US dollar, you buy GBP USD. Forex markets are always traded in pairs because you trade one currency for another currency. GBP USD, that's Great British Pound and United States dollar. Great British Pound, United States dollar. So if you are buying GBP USD, it means that you are getting rid of your United States dollar to buy Great British Pound. So that means you are trading between the economy of two powerful countries in the world, the British economy and then the United States of America's economy. So, and that's what is happening here now. So if the process rise, if the price rises, you make profit. If it falls, you incur loss. So it is possible in this kind of business, because it's actually a business. It's a business. And what I'm trying to do, what I'm helping you to do here is to acquire skill, to do this business and do it profitably well. And I know that's going to work because from experience, apart from personal experiences, I have my students who have successfully mastered just one or two simple trick I'm going to be teaching you. One of simple, very simple that has been strategies that have been practiced, that have been proven to have high percentage of profitability. I'm just going to be sharing them with you for free without you paying anything. So forex trading is the skill of analyzing global currency markets and managing risk to profit from the exchange rate movement. So there's usually fluctuation of exchange rates on daily basis, if not just on daily basis, per second in the market. And then if you acquire sufficient skill to trade and then to analyze and to speculate, and if you can only speculate in the right direction, you are always going to be making money. Please, I need you to understand that forex is not gambling, it's a profession on its own. The skill can be acquired. You can actually learn how to do it successfully. It's a speculation, it's not gambling. Gambling is not the same as speculations. Many people approach trading financial market or trading forex from the perspective of gambling. They just think they just gamble. They just come in. It's maybe just to press the button to buy and to sell. No, brother, it's more than that. It's more than that. It's a skill that you need to acquire. And yesterday I was saying something. I was saying to be, you need to approach financial market like somebody who is learning a new language, a brand new language that you've never learned before. So you need to be patient enough to learn from the basics, from the basics, from the elementary, then you graduate to the advanced level, and before you know it, you become profitable, consistently profitable in trading financial markets. Okay, so and then somebody who travels, if you travel from a country to another country, you carry your local currency. As you are entering another country, most likely your currency is not acceptable in those countries, in the other country you are entering. So what do you do at the embassy? At the embassy, you exchange your currency to, or for another currency, or probably the country you are entering into. And you see, if between the time you have stayed in that country and the time you are leaving the country, if there is difference in exchange rate, you will have either made profit or made loss, depending on whether the price has risen or the price has fallen. Okay, so every currency in the world is compared with other currencies in the world. So you have Ghana cedis to naira. Sorry, Ghana cedis to naira. Of course, yes, Ghana cedis to dollar. You have Nigerian naira to dollar. There's always this exchange rate. And I tell you, as long as there is international trade, there will always be forex. And so, see, when I say that, one of the things I want you to have at the back of your mind is that I have enough time to master the market. I have enough time to learn. This is not Ponzi that are going to disappear in the next 2 months or disappear in the next 3 months. This forest has probably been before many of us were born, and it's going to be, I'm tempted to say forever. I used to tell my students in those days, I said you can trade till a day before you die. You can trade till a day before you die. And I love when people master how to trade for it, because you see, it gives you freedom. And aside from giving you freedom, there is no age you get to that you cannot trade for. As long as your eyes can see the screen and your mind can think, you can always make profit in the forex market. You see, a man was in my office just about 3 or 4 days ago. The man is well over 70 years. And I'm just trying to, of course, he has attended our physical class before. And so he has 1 or 2 questions to ask. Maybe he wasn't getting something when he got back home looking at his notes. He came to the office, I spent a few minutes with him, and he explained what, and answer his question. So there's always exchange rate between one country to another country. And then next thing on my slide, who trade Forex and why? I like that. I remember many years ago when I understood from the chart who trade for it. All of these things look like theory to you. Don't worry. I'm establishing a very strong foundation. so that when we get to the chart, all and everything that we have said so far are going to be applicable. Everything is going to be applicable. Everything is going to be relevant. In fact, it is in Forex that we pay attention to every damn thing I'm saying with you right now, because everything will be necessary when we get to the class. When we get to the real charts, when we need to execute trade, when we need to enter a buy or a sell, when we need to put a stop loss or put a take profit. So who trade Forex and why? And of course, the why has been established. The why is to make profits. There are no two reasons. Everybody who comes to Forex market to trade is looking for one thing: to make profits, just to make profit. Nobody comes in to lose, but to make profit. And so who trade Forex now? The central banks. Every central bank of the world trades Forex. And in fact, most times it is central bank that determine the exchange rates in the country. The central bank trade Forex. Central bank trade Forex. Number two, the commercial banks. The commercial banks, the small banks, the big bank, the commercial banks trade Forex. If you come to, if you're in Nigeria, I'm talking about the commercial bank like GT Bank, like Zenith Bank, like First Bank, like FCMB, and so on and so forth. They all trade Forex. Number three, corporate organizations, corporations, corporate bodies. You have institutions, you have insurance companies, you have a lot of companies, you have hedge funds, you have corporate organizations that trade financial market, and that makes it very beautiful. All of these people, you will see where they are located on the chart when you actually come to the real market. Then retail traders, very beautiful. You see, retail trader, this is where you and I belong. Retail trader is where you and I belong. You are a retail trader. You are a retail trader. Many times when I hold class, physical class, I will tell them, put your hand on your chest, say, I am a retail trader. I am a retail trader. Are you still with me in class? Are you with me in class? All right. If you're in class and you're hearing me, I like to type in the comment section, say, I am a retail trader. Say, I am a retail trader. I like to just type it in the comment section. Type, I am a retail trader. I am a retail, and I will tell you why. I will now explain why I'm asking you to say so. I am a retail trader. Come on, come on, come on. I'm waiting for you. Write it in the comment section. I am a retail trader. And I'm waiting for you. Oh, beautiful, beautiful, beautiful. Now, why? See, I need to sink that into your subconscious mind that you are a retail trader. What does that mean? Very powerful. Because understanding of who you are in the market will help you, to maximize, your speculations, maximize profits, and then, being able to take advantage of price movement in market. So what do I mean? A retail trader is a trader that waits for the movement of the market. Number one, it is not a market maker. It cannot determine the direction of the market. His money is so small, so small. In fact, today I found out, yesterday I was saying 6.7 trillion US dollar turnover in the market. By the time I was trying to Google it today, I discovered it is currently 7.0 trillion US dollar turnover in the market. How much are you going to bring to the market that can determine the flow of the market? Nothing. See, no matter, even if you bring $1 million to the market, it does not move the market in any way, because your money is so small. It's so small, it cannot determine the rest of the market. Banks bring in money into the market in their billions of dollars, And market moves in the direction of volumes. Market moves in the direction of volume. If a bank comes into the market and it pumps in, maybe let's say 500 billion US dollar, 500 billion US dollar, and it pushes the market to sell, pushes the market to sell. For another bank or another group of banks to push the market in the upward direction, they must come in with an amount of money that is bigger than what is pushing it to sell. If $500 billion is pushing it to sell, they must come in with $600 billion, 700 billion, or 1 trillion US dollar to be able to push the market in the opposite direction. So they're the one, this bank, this central bank, this commercial bank, these corporations, they're the one that determine the liquidity in the market, they determine the direction of the market. So, but you, as a retail trader is like a diver on the sea. It does not generate the waves. It just waits for the waves to be set, and then it rides on the wave. It rides on the wave. This is why we tell ourselves as retail trader, trend is my friend. Trend is my friend. The philosophy of a retail trader is that trend is your friend. So you follow trend that has already been set up by this market maker, the central bank, the commercial bank, the corporation. You are a retail trader. You cannot determine the direction of the market, but you can always follow the direction of the market. So if there's another thing I need to type in the comment section, I'm a retail trader, therefore trend is my friend. Therefore, trend is my friend. I'm a retail trader. I'm a retail trader. I follow trend. I'm a retail trader. Therefore, trend is my friend. I like to type in the comment section. I'm a retail trader. Therefore, trend is my friend. So you do not determine the trend of the market. And so what it means is that when the market is buying, don't try to sell. You will wait to join the buy. The only way you will make money in the market is that when the market is buying, you too, you will try to buy. When the market is selling, you too, you try to sell. When the market is buying, you buy. When the market is selling, you sell. That is a retail trader. Let that sink into your head. This is going to be relevant in the future when we enter market practically. When I take it to the market and begin to analyze the market together. So you must never forget that you are a retail trader. Therefore, trend is your friend. Trend is your friend. I'm a retail trader. I follow trend because trend is my friend. I'm a retail trader. I follow trend because trend is my friend. Come on, come on, come on, come on, come on. Yeah, beautiful. I'm a retail trader. Therefore, trend is my friend. Never forget that one. If you get to our office now, if you get to one of our offices somewhere, you know, one of our offices, you see how we wrote it on the wall with hanging, wall hanging. Trend is your friend. Trend is your friend. So that when we are teaching people in our class, everybody's looking at, so that I point their attention to the trend is your friend. So what do? You are always waiting. You are like those that dive in the sea, the divers, those that dive in the sea. So what do? You see them carry their tools to dive. They are waiting for the waves. They are waiting for the waves to be set, and therefore they know they cannot generate the wave. See, somebody, when the market is buying and then you are selling, it's like you want until the market is flowing. You will take the trade in the direction where the market is going. And I want to make it very beautiful. That's what make it very beautiful. And that is what I want you to learn from that. Now, let's look at it. Let's look at this another chart. You see, at the center here, we have the central bank. The central bank, they are the most powerful liquidity provider in the market. Most powerful liquidity provider in the market. The chunk of the 7 trillion US dollar that comes to the market is provided by the central banks. And then we have next to central bank at the major bank. Their bank, we call them major bank. I'm going to show you the next slide of what we call major bank, the major banks, the major banks, the major bank. Then after the major bank, we have the commercial company. They can also call commercial banks. The commercial bank. The commercial bank are here, is here, and then we have large speculators. Large speculators they're like trading companies, trading companies that have put people's money together, and then they can also have it in billions. Somebody just come out, they form an institution, and then you know a, a corporation, and then people pull in money, and then they trade the market. They are the next in line here. Then we have the ECN brokers. ECN brokers. The ECN broker here are the brokers you and I, registered with to get access to the market. We call ECN broker. That's electronic uh, communication network. We have ECN broker. Then we have Then we have the market makers. You have the market maker here now. The market maker, these are also individuals that have influence on the market. I'll be taking time to explain all these things to you later on. Then we have the retail trader. Look at it. They are the extreme end is a retail trader. Look at it. Retail traders, retail traders, retail trader. They are the one that have the least influence on the market, on the volume or the direction of the market. They have the least influence. So, and that's what I'm reiterating to you, that you must trade like you are a retail trader. You follow the trend. You wait for the trend to deform, then you jump on the trend like a diver jump on the wave, and then you ride on it. You ride on it. Okay. So that is that about that. Then the next slide is where I'm talking about the major banks. What are the major banks? The JP Morgan Chase, the Bank of America, Industrial and Commercial Bank of China, Agricultural Bank of China, Bank of China Limited, China Construction Bank, Wells Fargo, Royal Bank of Canada, HSBC, Commonwealth of Australia, Morgan Stanley. These are banks that provide liquidity in the market, and it's quite very interesting. Quite interesting. This is what makes me get so excited about forex. It gets me so excited about forex because these people put in the money in billions. They are the ones that make liquidity available. Yesterday on the one of the first slide I was sharing with you is why should you learn to trade financial market? And then the first point was flexibility, and then the second point was liquidity. These are the guys that provide liquidity in the market. And so look at when these guys are bringing in $7 trillion all together in the market, and we are just after your $10 profit, $50 profit. I have a friend who teaches his students to just target $2 a day. He has a strategy that he teaches them $2 daily, $2 per day. That's the strategy, $2 per day. So his students come to the class. As soon as they make profit of $2, they're out of the market. They follow the two market, $2. Now, when they lose, they recover the money back until they start making another extra profit of $2. And that's remarkable. So you now imagine taking away $2 from $7 trillion. Will the market feel it? No, the market will not feel it. So this is the reason why I can teach you, because the profit you make does not affect the profit I make. You see, you are not my enemy, I'm not your enemy. See, I've trained students. There was one particular time I trained some students, and then my students, they were making more money than me. And there was nothing wrong about it. I'm not at that time they were making serious money than me. Of course, later on I become, steadily, quite interesting. So this market is so large, so big, so large, so big that, see, the profit you make does not affect my own profit. And that was what I was telling you yesterday. I love to train the black people. I love when I train a fellow black person, a fellow African. You see, I know I've traded for, guys. I've traded for one or two ladies in UK before as for account management, but then my focus is always on African, because I feel these resources that have been looted from Africa, we can get part of it back when we trade financial markets. That's beautiful. That's beautiful. And I love it. And I love it. So next, all right. So let's go deeper now. Let's get deeper. Let's get deeper. So forex terms, trading platforms. This is when it's getting deeper. This is when it's getting deeper now. We're just starting. We are still laying very strong foundation, but we just started scratching the surface. Okay? Trading platforms. So for the next couple of classes, I'm going to be explaining to you trading platforms, candlesticks, pips, lot size, risk to reward ratio, take profit, stop loss, bruise and bear, long position, short position, and many other things I'll be explaining to you. Trading platform. So let's begin from the first one, trading platform. A trading platform. A trading platform is a software or application that allows you to access the financial markets, analyze the prices, the price chart, and place buy or sell trades. Now, you see, sometimes you're wondering, yesterday I said something like, oh, you have access to the global market that everyone all over the world has the same access to. You see, what you are looking at in your room, the charts, the price, the market you are looking at in your room, on your bed, in the toilet, in the car, on the bike, anywhere you are, in the same market somebody is looking at in the US, in the UK, in the Canada, in China, in Japan, the same market. The same market everybody is looking at the same time. The same market, no difference at all. Everyone is looking at the same thing all over the world. So what gives you access to see what everyone all over the world is seeing is called a trading platform. A trading platform. A trading platform connects you to markets and lets you execute trades and allows you to view live charts, to buy and sell instruments, forex, gold, indices, and crypto. We use indicator and drawing tools to manage trade, stop loss, and take profit, to monitor the profit and losses, analyze market histories. That's what the trading market does. That's what the trading platform does. But for the purpose of this class, I'm only going to be introducing you to four of them. Maybe three actually. The first one, the market MetaTrader 4 and 5. MetaTrader 4 and 5. MetaTrader 4 and 5. So we have MetaTrader, we have MT4 and MT5. Then after sometimes I will teach you how to use trading view to analyze your trading views, to analyze your trade. Then C trader. I only use trader on deriv. C trader is a web-based. Trading view is also a web-based. While MetaTrader 4 and 5, they are applications that you're going to download. In fact, before the next class tomorrow, all of you must have downloaded MetaTrader 4 and MetaTrader 5, and I will show you how in a moment. So for the purpose of this class, these are the ones we're going to be focusing on: MetaTrader 4, MetaTrader 5. In fact, don't download MetaTrader 4 at all. Let's use MetaTrader 5 together, okay? So I'm just explaining to you that there's something called MetaTrader 4 and then MetaTrader 5. But my recommendation, when you are opening an account with a broker, choose MetaTrader 5 instead of MetaTrader 4. I'm of the opinion, if you were my student in 2000 till 2022, I would recommend MetaTrader 4 for you. I would recommend MetaTrader 4 for you. But from 2023 till now, MetaTrader 5, because MetaTrader 4 is becoming archaic, it's becoming old school. So I'll be recommending MetaTrader 5 for you, and then TradingView, then we use CTrader. But largely my focus will be on MetaTrader 4. Largely my focus will be MetaTrader 5 and TradingView. MetaTrader 5 and TradingView. MetaTrader 5 and TradingView. Those are my focus for the purpose of this class. And this is how MetaTrader 4 and 5 looks like. Okay, this is where we gain access to the market. This is where we see what is going on all over the world. And so you have to get used to MetaTrader, get used to these applications. You're going to download them before tomorrow, because from tomorrow the class will be more practical. We start entering charts. I'm still giving the theoretical foundation for what we are doing, okay, for what we're about to enter to do. Okay, so we have MetaTrader 4, MetaTrader 5. You will download them. I'll give you a link to download them. Then this is how our chart looks like. Okay, this is how chart looks like. And then the moment you master this, what I call market language. Okay, this candlestick. This is what we call candlesticks. Candlesticks, and they all mean different things. Look at the anatomy. One of the topics I'm going to be sharing with you is what we call anatomy of candlesticks. Because of different body sizes and formations. Look at this one. There's a name this candle is called. 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 If I have to give you some names, look at this candle. It's called doji candle. Look at this candle. It's called hanging man. Look at this candle. Compare with this. It's called bullish engulfing. This is another doji candle. This candle is called shooting star. It's called shooting star, depending where it's formed. And then this candle, which other candle? This candle is called shooting star. This is another doji. All of them, they have different anatomy, which you're going to be going through in the course of this training, because the more you understand the candlestick formation, the more money you will make. If you're to be in physical class, I used to tell my students, now candle money we they spend, candle I know. You understand what I'm saying now? Oh, candle are now, because the moment you understand the candlestick pattern formation, the candlestick formation, the anatomy of it, what it means, what it connotes, what is representing in a market, because you see, the market, at every single time in the market, there are buyers and there are sellers. And whoever is having an edge in the market, it will determine where the direction of the market will be. And the candlestick is what gives you signal, is what lets you to know what exactly is going on as a retail trader, so that you can enter market and make profits, I make profits and make your life better, and buy yourself whatever you want to buy, take yourself out, buy yourself cars and build houses, pay your school fees, fund your vision. If you want to enter agriculture, fund your agriculture, vision. If you want to enter production, you want to enter anything, whatever you want to do. This is not just about buying car and cruising. Have a vision that you need to fund. And that's the reason I'm teaching you this now. There must be a vision that you have in mind, because you see, something happened one particular year. I think in 2023, I stopped teaching people for like a year or so. I just stopped trading, because it's kind of, what is the purpose? If I just teach people, they just make money, and then they because I saw some of my students started drinking and spending money anyhow. I like, no, that's not the essence of me teaching you. The essence of me teaching you is that you get financially independent and you'll be able to fund your vision. So it's very important. You're going to be going so deep, very deep on the anatomy of candlestick. So there are candles I'm going to be teaching you specifically, very powerful candle. But you see, in the last class, I taught them plenty candlestick formation that they must take note of. But in your class, I'll be reducing everything to four, only four, only four. For the purpose of a class, I'm going to reduce it to only four. Those four, you must master them very, very well, so that I can cover a lot within the 12 days we're going to be together, right? So so when we trade financial market, when we trade forex, we're actually trading money against time. We're trading price against time. This is price, this is price, and this is time. So when you open your charts, you are trading time against money. So it is when you become a forex trader that you want to quite understand what is it. Time that money, time that money, time that money. You understand what I'm saying now? Time that money. So you will see that what we are doing actually, in basic sense, we are trading time against money. So the forex market has a lot to do with time, has a lot to do with the price. The combination of price and time is actually what we are trading in a financial market. And so when you see something like this, you see, we're going to be going deep into candle formation maybe in the next class. You see candle like this. So you're seeing two different colors. When you see a red candle like this, it means the price is selling. Price is selling, price is selling. And then when you see blue candle like this, you see that price is buying. See, the color is not what is the most important. It's the understanding of the formation. The opening price and the closing price is what actually matters. For example, look at these blue candles. This is the opening price. Then this is the body of the candle. This is the upper wick. This is the lower wick. This candle, let's assume, is 1 hour candle. What it's telling us is that there's a formation of, within this 1 hour, price opened here, and then at the end of 1 hour, the price closed here. But within that 1 hour, price actually went lower and then went upper than the closing price. That's what it means. We're still going to go deeper into that later on. So now let's now imagine that the opening price here is 1.4007 and the closing price here is 1.4077. Don't forget, the opening price is 1.4007. The closing price is 1.4077. Now, if you subtract the opening price from the closing price, that means 1.4077 minus 1.4007. That will give you 70. So that will give you 0.0070. 0.0070. And that takes us to another point I want you to pay attention to. Now, you see, in the forex market, there's something we call the PEEP. The PEEP. The PEEP. So you see that the price are written in 4 decimal places. Or sorry, yeah, 4 decimal places. 1.4049, 1.4035, 1.4021, 1.4077. Now, if this thing move from 1.4007 to 1.4008, that means the price has moved by 1 pip. If it moves from 1.4008 and move to 1.4010, price has moved from 008 to 010. That means price has moved by 2 pips, by 2 pips. Now, the price has moved from 1.4007 to 1.4077. Price has moved by 70 pips, by 70 pips. This is how we calculate pips. Don't worry, I'm going to take you to the chart. Though not today. From tomorrow, we start entering charts practically. From tomorrow, don't miss class tomorrow. From tomorrow, we start entering class practically, and you're going to see how the financial markets, the financial world actually operates from the palm of your hands. I'm telling you. And so you see, this is PIP. The fourth decimal place is called PIP. When it increases by 1, price has moved up by 1 pip. If it decreases by 1, for example, if you have 1.4007, if it drops by 1.4006, that means price has dropped by 1 pip. By 1 pip, it has dropped by 1 pip. If it increases from 1.4007 to 1.4008, price has price has increased or has moved up by 1 pip. In this case now, price has moved by 70 pip from 1.4007 to 1.4077. 70 pips. 70 pips. 70 pips. And that's beautiful. 70 pips. Look at it here. And so the fourth decimal place is called pip. It's called pip. If this thing jumps from 1.4001 and moves to 1.4005, price has moved by 4 pips. That means you subtract this from the closing price. Price has moved by 4 pips. The fifth letter is what we call the pipette. The pipette. You may not always need that one. Just know that the four decimal places are very important to you. For example, if price moves from 1.4001 and price moves to 1.4101, price has moved by 99 pips. 99 pips. Oh no, sorry. Price has moved by 100 pips rather. If price moves from 1.4001 to 1.4101, that is, price has moved by 100 pips. So that's how to calculate pips. You will see it at the right hand side of your chart, how to calculate pips. Of course, there is exception to currency pair that have Japanese yen inside of it, which we are going to be talking about much later on. Much later on. Now, so let me quickly come back to this place. Or maybe let me discuss that one later. Let's discuss that later. So you see, this is how currency pair is written. Currency pairs are always written, or sorry, currencies are always written in pairs. They are always written in pairs. So you see something like this, Euro USD. Euro USD. I told you Forex is selling one currency for another currency at the same time for the purpose of making profit. It's always one currency. So this EUR is euro. Then this USD is United States dollar. What this means is that at every one euro, you will collect 1.4 US dollar. Every 1 euro, the exchange rate is that when you have 1 euro, you have equivalent of 1.4 US dollar. 1.4 US dollar. Now let's go to the next slide. What currency pairs are traded? And see, when you begin to see all these currency pair, which I'm going to be introducing you to later on, you will see their symbols, you see the country, the name of the currency, and their nicknames. Now, every time you see USD, what it means that the first 2 letters there is the name of the country, and then the last letter is the name of the currency. For example, when you check your account balance on your service provider, maybe MTN, Glo, Airtel, and the likes, and then they give you account balance, you see NGN, they give you the amount. NGN $2,000 account balance. And then what that means is the NGN is Nigerian Naira. NG, Nigerian. The last N, Naira. If you are in Ghana, you have GHC, Ghana Cedis. And that's how it works. So here you have United States dollar, Then you have euro. Euro is just euro. Euro is euro. Then you have JPY. Japan is the JP. The last letter here, Y, is the currency. Is the name of the currency of that country. So we have Japanese yen. Then you have Great British Pound. The GP there, the GBA means Great British Pound. Great British. The P there means the name of the currency, pound. CHF, Swiss franc, Switzerland franc. Then you have CAD. CA means Canada. The D there means dollar. Well, this CH may not really follow, accordingly like that. Then we have AUD. AUD. AU means Australia. D there means dollars. Then we have NZD, New Zealand. Then the currency here is means dollar. Then they have their nickname: the buck, the fiber, the yen, the cable, the Swizzy, the loaning, the Aussie, the Kiwi. Then they have them all like that, like that, like that. I'm going to take it to the next slide, which is also very important. Very, very important. If you're going to make money in the market, very, very important. Look at my chart. Look at my slide right now. You are seeing a pie chart on my screen. You see a pie chart on my screen. And this pie chart is telling you, I'm going to end the class right now because I've stayed so long. I don't want my video to be too long. I love to break it. I love to break it in pieces, but what we are doing here is very important. Very important. Now look at the pie chart on my screen. You will see that you see the US dollar, see the percentage of the pie chart is occupied. Then you see the next to it is euro. Then you see the Japanese yen, you see the pounds, you see the Swiss franc, the Australian dollar, the Canadian dollar, the dollar, the New Zealand dollar. Then you have others, the other ones just like that. Now, what this means is that the dollar is the most traded currency in the world. Number one. Number two, United States dollar is the most powerful currency in the world. Now, listen, it is not the most expensive currency, but then it is the most powerful currency in the world. It is not as expensive as euro, it's not as expensive as pound, but it's more powerful than any currency anywhere in the world. And look at it. Next to next to next to US dollar is euro. Euro. Look at the percentage it's occupying. After US dollar is euro. Then we have the Japanese yen. Then we have the pounds. Then we have the pound. What this means is that if you want to make your choice of the instrument to trade, I like you to trade from the combination of these. Combination of these. Now you now have Euro USD, just like I was sharing with you a moment ago. Look at this chart. Euro USD is a combination of the two most powerful currencies in the world. Now let me not tell you. Let me shock you something. Let me shock you. Now this Euro USD has this Euro USD alone contributes over 70% of the liquidity in the market. It represents the two most powerful economy in the world. And so Euro USD alone as instrument, as a currency pair, provides over 70% of the liquidity in the market. So when you want to trade, you can trade something like GBP USD, you trade something like Euro USD, you trade something like USD JPY, trade something like GBP USD, trade something like Aussie dollar, Swiss franc, US dollar. Then we have the Aussie dollar, then USD card. Anything that has USD in it has tendency of having liquidity in the market. Anyone that has euro in it has tendency of having liquidity in the market. Anyone that has Japanese yen in it, any currency pair that you're choosing that has Japanese yen in it has tendency of giving you strong liquidity in the market. So when you're making your choice in the future and you want to I want to select currency pair that will give you quick profits, within the shortest period of time, that the market will move in the direction that you speculate, then you have to choose this from these four instruments: USD, Euro, Japanese yen, and pound sterling. Okay, let's go to the next slide. And again, these are the rates: Euro USD, USD ZAR, GBP USD, GBP CAD, GBP CHF, GBP JPY, GBP NZD, GBP, and then you also have USD and USD and USD. Then we have the JPY, USD JPY, and GBP JPY. Usually, I love USD JPY. I trade USD JPY, especially at the middle of the night from 1 a.m. to 4 a.m. at night, Monday to Friday. I love to trade USD JPY. And then in New York session, I love to trade USDJPY. Then I trade gold a lot, and I also trade GBP GBP is one of the most powerful currencies pairs in the world. Okay, so now major currency pairs that you should look at. Now from today, now I like to write this one down in your note and paper. These are the currency I want you to focus on. I want to focus on because altogether, this one, apart from Euro US that has 70% of the market, this one together, this major currency together has over 70% of the total turnover of the market. So you have Euro USD, USD JPY, GBP USD, AUD USD, NZD USD, USD CHF, USD CAD. You can see that all of them have United States dollar as part of their pair, whether as base currency or as quote currency. You can see base currency if it's at the front, quote currency if it's at the back. Base currency is at the left, quote currency is at the right. So, okay. Next to that is this. So we have, when you see currency pair like this, the one on your left is called the base currency. The one on your right is called the quote currency. The one on your left is called the base currency. That means your base value. Your base value. Usually the value is always one, always one, always one. Then you have your USD. Then you have your quote currency on your right. It can be it can be rearranged in any way. So if you have USD JPY, the one on your left, the USD is your base currency. The JPY on your right is your quote currency. The value of the base currency is usually one, and the quote currency can be the exchange rate. For example, if you have USD NGN, that means US United States dollar versus Nigerian naira. You have that means then anytime you have like I think at the moment you are 1,400 something. Let's assume it's 1,400. Let's assume 1,400. And so you have that means $1 will give you 1,400 naira. So your base currency in that scenario is your USD, then your quote currency is your naira. Okay. That will quickly take us to the end of the class today. I'm going to continue tomorrow. Before we end the class today, I like you to open an account. Open an account with if you don't have any account before, open an account with this broker, and then you have to do it systematically. You have to pay attention here because if you don't between now and tomorrow evening, you must have completed opening these accounts, okay, so that you can have access to both, especially your demo account, your demo and then your live account. We need them to trade together tomorrow because from tomorrow you're going to be having assignment to do. You're going to be having assignment to do from tomorrow. So what I need you to do is you go to our website, apic.net, www.apic.net. You type it, you search it on Google, and then you click. As you come to the home page or the website, you will open an account with these three brokers. Okay, my sign up link is there. You sign up with Deriv. Deriv, that's where we trade crash and boom. We trade volatilities. We trade step index. We trade jump, and then we trade, a lot of other markets that operate 247. 247. On Deriv, you can trade currency pair, you can trade gold, but especially you can trade synthetic indices. And then you can also trade crypto there. Then we have the HFM, and then we formerly called Hot Forex. So you go to our website, this link, then you click. First of all, click this one. It will direct you to maybe put in your email, you start following the instruction. If you have any question to ask, just come to the DM on the WhatsApp, send it to the DM of any of the admin or on the group. They will respond to you to guide you through if you have questions to ask. So you go to open an account here, and it's always going to be advisable to you too, because this is how we know that you are attending our class. So that in the future, when we want to add it to our signal group, you will need this as a prerequisite to be sure that you have attended our class before and you have been part of our students to be able to add you to mentorship class after this training. So you click, you open Deriv account, you open HFM account, you open XNES account. At least open two. You must open Deriv and one of these two. And advisably, you open two of them. Open all the three accounts, but you must open Deriv and Forex, or you open Deriv and XNES, or you open Deriv and the remaining and the other two. If I advise to open all the three together. So what I do is that when I want to trade synthetic indices, I'm on Deriv. I also trade gold on dairy because Grave has one of the most powerful, tightest spreads you can ever imagine. Then when I want to trade futures, when I want to trade commodities, when I want to trade other things, I want to stay in long term as a swing trader, I'm on HFM. You understand? Then I use XNest too. So these are the account I want to open tomorrow. Make sure just go to our website, click the link, or if you need the link and the DM, just prioritize any of the admin. Click the link, follow the instruction. If you get anywhere, you get stuck, you need to ask questions. Send screenshot where you have questions. Send it to any of our admin. They will respond to you so fast, so that by this time tomorrow, all of us must have, you must have established your account so that you can go properly into technical analysis on tomorrow. All right. At this juncture, I want to end the class. I believe you have learned something tonight. The first app. Which one is the first app? Someone is asking me a question. Please, sir, what do you call the first app name? Okay, the first app to download or what? Is it when we say Google Meet and Zoom? Google Meet or Zoom or something? Okay, so I'll be ending the class now. If you still have questions, you can send it. You can send it as DM on the WhatsApp group. Thank you and God bless. See you in class tomorrow.